Hi, welcome to FreightWaves Friday edition. We are talking the launch of the futures with Tom Mallon. We're talking oil with none other than John Kingston. And we're talking the weather with Chief Meteorologist Nick Austin. Nick, how's it going on this special day today?
Chad, doing great. And
Good.
how are you this fine day?
I am doing it's just lovely around here.
It's a beautiful day in Chattanooga for lots of reasons, not just the weather outside.
And
the weather's a bit frightful elsewhere, though.
It is frightful, not delightful.
Yeah. Across Wyoming today, known as the Cowboy State, lots of snow across parts of Wyoming, and it's heavy in some spots. So there are some winter storm warnings out, including some portions of I-80, and also across parts of Nebraska, some snow. There is rain in parts of the Midwest that's ongoing today, and that'll change to snow tonight, but that's not good because there's still a lot of flooding in the Midwest, and that's probably going to last for just weeks and weeks and weeks.
Oh, okay, yeah.
And it's spreading to other states. You know, we've been hearing a lot about Nebraska and Iowa as far as the flooding, and even some parts of Missouri and Kansas. But just yesterday, the flooding has spread across parts of the Dakotas and all the way over into Montana too, because of snowmelt and ice jams on rivers. So a lot of frozen ground with snow still on the ground. Some of that snow is melting, but it has nowhere to go really because the ground is still frozen. And so there's ice jams in the rivers. The snow melt itself, some of it is trying to get downstream. And so anyway, there's lots of problems there.
Yeah.
So that's going to be ongoing in the Midwest probably for weeks and weeks and weeks. But if we bring up the road conditions, a great new feature of sonar is you can look at forecast road conditions where there's going to possibly be disruptive weather.
One of my favorite features.
Isn't it great?
Yeah, I love it.
It's really a good feature. And this is in that area across Wyoming, other parts of the West and the Mountain Prairie where there's going to be that snow falling. So some of the roads you'll notice, including interstates like 15, 25, 90, are kind of turning, you know, the pink and the dark red colors indicating snowy and slushy conditions. Maybe some road closures, but it's mainly just going to be really sloppy driving on some of the interstates and the secondary roads and going through some of the mountains out there. So that's what we have to look forward to today and into the nighttime.
Okay, thank you, Nick Austin, Chief Meteorologist. And now we are going to be talking with John Kingston. Hi, how you doing, John?
Good, Chad. How are you?
Great. What's up? How can you connect everything to oil?
We'll talk about this later. What we don't have is a graph in sonar that shows the possible end of the influence of Donald Trump on oil markets, and I think yesterday was a significant day. President Trump has tweeted now 12 times, according to S&P Global Platts, about oil prices, and every time the market reacted by going down. Yesterday he tweeted, same thing, oil prices are too high, OPEC needs to make some adjustments, and oil prices dropped, and they came right back up. When you look at it at a chart, it's really sort of stunning how fast it reversed. And you know, at a certain point, these tweets kind of lose their effectiveness. If the President of the United States tweeted about oil every day, you wouldn't have $20 oil. At a certain point, fundamentals are going to be more important. So I think yesterday was significant because not the market fell, it came rebounding right back, and it just kept right on going. And by early this morning, WTI was through $60 a barrel. And remember something, on Christmas Eve, which was the low for a lot of markets of late, that price was about $42. So you see how much it's come. So I think that where it's significant is not just in yesterday, is that there's been some fear, some feeling that traders might be a little bit reluctant to go long in the market because they were afraid the president might come in, tweet, the market goes down. But if all he could essentially run the market for yesterday was a couple of hours on the bottom of one tweet, on the base of one tweet, and then that's all in the past, then I think you're going to see people thinking just, you know what, he's background noise, the fundamentals will matter in the long run, I'm just going to ignore him. So I think it was an important day.
Yeah, the law of diminishing returns when it comes to tweets.
Exactly.
Okay,
yeah.
And oil.
So then the other thing we have is we have the sonar graph for the last 5 days. This is the national average for wholesale rack prices for ULSD. This is one of the factors that ultimately makes its way into retail prices, which of course becomes the basis for the DOE weekly retail price. You'll see, you know, at the start of the week, start of the week dropping, then going up and coming down. So by the end of the week, we're kind of right back where we started. And I think what it means is that while the DOE retail price on Monday, when it comes out, might show some movement, it's not going to be significant. The diesel market is stuck in a pretty tight band, and users of commodities, they all pray for this nirvana of stable prices. Well, I think you can say in diesel recently they pretty much got it.
Got stability. Well, that's nice. Thank you, John.
Thank you, John.
Excellent stuff. And one of the reasons that we want stability is because there's volatility in the markets, and that is one of the reasons that we have the freight futures that has just been. This is the inaugural day for it. Come on up, Tom Mallon, and talk to us about it. First of all, why is today a special day?
Well, today is a culmination of 2 years of hard work. The first ever trucking freight futures contract was traded today. It traded on the Nodal Exchange, and it traded at $1.34 cents a mile. And what traded was the National Van Index, and so very, very exciting.
And is that what we have up here?
That is what we have here on the FreightWaves sonar screen, and you can see here the price and the price of $1.34.
And that's the very first
ever
futures contract
that will ever trade. And the thing about this is they're what they call cash settled markets, meaning there is actually no physical truck involved in the transaction. So that's a very, very important point to make.
Okay, right, of course. Why, Tom, is now such an important time to launch, with such a large economy behind it? Why is now the time to launch a freight futures?
Yes, that's a great question. I think there's a couple reasons for that. You cited one. I mean, the trucking freight rates, spot rates, are extremely volatile. The market itself is massive, a $730 billion market. If you put that in context with oil and agriculture, it's about a third to 40% bigger than those two markets. And so you have a very large market, a very volatile market, and no way to manage risk in spot rates. In addition, you have a lot of information today that is aggregatable into sonar and platform like FreightWaves Sonar, which didn't exist 5 years ago. So 5 years ago, you could not create a reliable underlying index, which we have today for the freight futures that is being provided by our partner DAT.
Is it just spot rates that we're going to be talking about when hedging our risk in one direction or another, or do contracted rates have anything to do with that?
Yeah, so we are focused specifically on the spot market and the spot rates. People talk about contracts, but in essence, within the trucking world, I mean, the contracts generally can be as good as the paper that they're written on. So a lot of freight, ultimately, that's contracted moves to spot. And so we're addressing the problem of spot rate volatility, but contract rates, ultimately do move towards spot and therefore can be managed and protected.
Okay, yeah, we've been talking about, when we pull up our map on occasion, we talk about the big lanes from Seattle to LA, and LA to Seattle, and LA to Dallas, Dallas to LA, and then our triangle as well, right, from Atlanta to Philadelphia, Philadelphia to Chicago, and Chicago to Atlanta. And those we refer to as the western lanes and the southern lanes and the eastern lanes. And I understand that 85% of the total logistics traffic runs through these lanes. Mm-hmm. But let's just say, so for someone trying to understand this a little bit, let's say you're in Waco and you're driving a truck to Omaha. How does your lane, how is that impacted by any of these lanes?
So that's a great question. So, to your point, I mean, the lanes that we've selected, as discussed, so in the west, we've got LA to Seattle, Seattle to LA, LA to Dallas, Dallas to LA, and then the triangle in the east. These lanes make up about 23% of all freight that is moved, which correlates nationally to almost 84% of all freight. And remember, these are cash-settled contracts, financially settled contracts, which means there's no physical truck involved.
No truck bumps the dock.
No truck involved. So if you take the fact that these are financially settled lanes, no truck, what's being benchmarked in financially on one of the lanes correlates to, to something regionally, or it correlates to something nationally. So in your example of a lane going to Waco, there would be a correlation between either the south basket or the west basket that would be applicable to that lane.
I see.
But again, these are financially settled contracts, no truck, there's no physical truck moving on the lane, it's representative.
Right, okay. Well, thanks for that clarification and for answering these questions on this very special day. Great to have you on, Tom. Awesome, thank you. And thank you for tuning in on this very special day. Please excuse our noise outside. There's a lot going on as people are breaking down stages and moving chairs. It's just a lot of different things going on here today. But we are here each and every business day at 4 o'clock. So check us out, share the love. We're on FreightWaves.com, and you can find us on social media. And in the meantime, have a great weekend, and don't worry, be happy.